separate companies. Apex is, we're an online community of traders helping traders. We're an education company. Nadex is the exchange. Like I said, we do these webinars every Monday night. And we're going to talk about spreads tonight. If you're with us last week, we covered trading spreads directionally, and then before that, we've covered kind of the basics of spreads. I'm going to show you where you can, we're not going to really dig real deep tonight into the basics. I'll show you where you can get some of that information. If you're brand new or if this is one of your first webinars, you may have a little bit of trouble keeping up with us on a few things, but I think you'll still be great info for you to help you. But I'll show you where you can go back and make sure you've got all the basics covered as well. So let's hop into this right away. I'm going to try to keep it a little shorter tonight than I normally do. I know I say that all the time, and I know Phyllis is already laughing at me on here. She gives me a hard time about that, but I do have another appointment a little later, so I'll try not to keep you guys for 2.5 hours tonight like we've done before. So that being said, feel free to ask questions. Yeah, there's Phyllis. There we go. Feel free to ask questions as we go along. If I don't answer your question right away, I'm not avoiding you. I'm just trying to keep us on track to get through the material. Most of your questions will either be answered in the next section that I'm going to review, or can be answered in some of the basics sections that I'll refer you to. Otherwise, at the end, I'll try to go back and make sure I get your questions answered, just so that way we don't hold everybody up, pause in between each section here. So I'm not avoiding you, just getting through the material to keep us on a good schedule, and then I'll come back and go through some questions here. But all right, let's knock out our disclosures here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Any trading decision you make is your sole responsibility. Contents of this webinar are not an offer or solicitation of an offer to buy or sell any financial instrument offered by Nadex, and past performance is not indicative of future results. So like I said, there's a few of you on here that are brand new, and this is one of your first webinars, and you're very new to Nadex. So if you're on nadex.com, you can go through and get some quick information here about the different options that Nadex has. Basically, Nadex offers two different products. They offer binary options and spreads. I'll show you where you can get some more information about both. You can go through here and read some. I'll show you where you can get some real in-depth education on them as well. Free education. Tonight we'll be talking about spreads. I want to real quick bring your attention right here under this trading tab. Go to the second one down, demo trading platform. If you're new and you don't have a demo account with Nadex yet, go ahead and get one right away. In fact, hop on right now while we're on this webinar. It will help you follow through with us and get a quick demo account. All you got to do is select a username, fill out some quick information, and submit it. And in just a few moments, Nadex will send you a temporary password where you can log into the Nadex demo site, and they'll give you a lifetime free $25,000 demo account. Okay, even if you don't already have a live account with Nadex, that's fine. You can still get a demo account, and that will help you get familiar with the Nadex platform, get familiar with how to, enter and exit orders, the different products that Nadex, has, the different instruments. If you're testing out any new strategies or systems, a great place to test everything out with demo money, not with your live money, especially when trying something new. So if you don't have one, hop on and take advantage of that free tool. From there, hop on over to our website, apexinvesting.com. You can go right here to join free now, and you can select a free username and password. Once you have that, you can log into the site here. And I just want to give you a quick review of a couple places to go for some free information. Okay, there's literally hundreds of hours of free education in here to learn about trading, different products, different instruments, but particularly about Nadex binaries and spreads. Once you're on the website, real easy, just right here, Elite Education. You can go right here for Nadex spreads or right here for Nadex binaries. Very easy. Everything you need is right there. For example, tonight we're talking about spreads. It's a quick video about spreads. The next tab is Nadex, signing up for a demo account and live account. Then right here, there's a training course, Nadex Spreads 101. So if you have not been with us over the last few weeks or you're new to spreads, we're not really getting into a ton of the basics tonight, but you can go right here and literally go through this course. This is not one big long webinar. This is literally a course with units and modules broken down step by step for you. An intro to Nadex, some live trades, spreads 101. What are spreads? How do they work? What is the risk reward? What is proximity? What is premium? It really breaks it down. Once you go through this course and get a good handle on it, you will understand spreads and you will know what they are and how they are tradable. From there, okay, I know what they are. How do I trade them? What do I do? And then right here, spread training systems. We go through and show you step by step some of our training systems that we use, or our trading systems that we use for Nadex spreads, step by step, what indicators we use, what charts we use, how you can get those, when we enter, when we exit. All that information is absolutely free for you as far as all the education, okay? Chris says, why is all this info free? Well, we're an education company. Yeah, we have some different packages and memberships and live trade rooms and all that, but that's completely separate. All of the education is absolutely free, okay? When you sign up to get a free username and password with Apex to get access to all this education, you don't have to put in a credit card number, anything like that, all right? All the education is free. Same with binaries. If you're a binary trader, same thing. Go through, get all the information, how binaries work, different ways to trade them, and so on, okay? So check that out. Take advantage of those free tools there. And while you're at it, after you get a free username and password there, hop on over to facebook.com/apexinvesting. Like us and follow us on Facebook. Once you have liked us, if you click right here where it says liked, a little drop-down box will pop up. Select all posts. That way you'll get notified of anything we put up. It's a great way to follow along. We'll put up information about upcoming webinars, webinar recordings, news events you need to be aware of that might affect your trading, new strategies, new systems, articles, all kind of good information there for you. Absolutely free that you can stay notified of. So tonight we're going to be talking about picking the right spread and understanding spread pricing, how the value of a spread works, and how to quickly find the right spread. Okay, and like I said, we're not going to be really digging into spread basics, exactly how they work. If you need to catch up on that, a couple things you can do here. First of all, you can go to where I just showed you there, some step-by-step training courses, okay, on spreads. But tonight's webinar is being recorded, and let me show you where that is going to be posted at, and where you can find some old recordings as well. Right here, if you're on our main site, right here under the help desk and forum, go to Trading Questions Forum, just click that. Forum's broken down into several different sections, and once you get there, if you scroll towards the bottom of the page after the different, this is all free information as well in here in the forum, all kind of things about trading psychology, risk management, step-by-steps through all of our trading systems, all kind of information in there. Great place to socialize with other traders. But towards the bottom here, watch webinars here. A whole library wealth of education here for you, literally hundreds of hours of free education. We've got getting started with Nadex, bunch of webinars, Nadex spread webinars, Nadex binary webinars, a whole library here you can go through. But right here, newest webinars. If you click that, later tonight, that's where tonight's webinar will be posted. And if you've missed some of the last few weeks, you can go through and check them out. As you see, Monday Nadex webinars from last week, directional trading with spreads, in the money and out of the money binary strategies, trading mentality, trading binaries at night, all kind of great webinars there. Okay, so feel free to catch up on any of that information you might have missed, or on some of the spread basics. Okay, so all right, let's see here. Give me just 1 second to respond to someone here. All right. There we go. Okay, you got it? Okay, perfect. All right, so I showed you where you get some of that basic information on spreads. So I'm going to, basically, we're not going to cover through all the basics of spreads here. We understand that a spread has a floor and a ceiling, okay? And we understand that you cannot lose money outside of the floor or ceiling, and you can't make more money above the floor and the ceiling. Okay, we've gone through some of this information in the past. You're welcome to go through the basics. I'm just kind of scrolling through here. I want to jump in. I'm going to assume and act like everybody's up to speed on how a spread works. Okay, we know that a spread basically is $1 per tick. All right, it's not like a binary. It's not all or nothing. It's not 0 or 100. Okay, at expiration. All right, with a spread, it mirrors the market $1 per tick. Okay, wherever I get in at compared to where I get out at or where it expires at, that's the amount that I make or lose. I believe all of us understand that. So I want to, first of all, I'm going to pull up, it's going to be a little bit more of an interactive kind of webinar tonight. I want to pull up the Nadex demo site here real quick, okay? And I want to address real quick, for example, I'm going to choose Forex Spreads. Let's just go to Euro Dollar. Right now we can see that we've got some different options here. We've got some spreads that open up at 6 p.m. and they expire at 11 p.m. All right, and all the times anytime you see a time frame listed on Nadex, that is Eastern time. And you see right here that these are 250 point wide spreads. What does that mean? Well, let's click on these. We've got 3 different spreads to choose from, okay? And they all are, look, 250 points wide. This one has a bottom or a floor of 1.1100 and a top or ceiling of 1.1350. So 250 pips. Same here, 975 to 225, 250. 850 to 11, 250. Each one of these spreads is 250 points or pips wide, just like it says here. We've also got some spreads that go from 6 p.m. until 8 p.m. All right, and those are 100 points wide. As you see, we've got 3 of those. Same one. Each one will be 100 points wide. Then there's the daily spreads. And this is what I want to bring your attention to. Any of you that are familiar with spreads and have traded them before know that in the past on the Forex spreads, there was only one daily spread. It was a big 600 pip wide spread, okay, or a big huge spread. But now Nadex these are in demo right now. They're not yet in live. Okay, Nadex is working on adding in more daily spreads. Okay, right now you'll see them in demo, but they're not quite yet in live. Give it a few weeks and they'll make an announcement if they're going to go ahead and if and when they're going to be in live. Normally, they'll test new things like this in demo for a week or two, and then you'll see them in live. So if you've been trading spreads, they are now looking at having more options for the daily spreads. Daily, what I mean there is if you see right there, right now it's what, 7:15 Eastern time. These spreads go all the way till 3 o'clock tomorrow. Okay, you see that? And if you look here, you've still got a big spread here from 850 up to 1350, right? A 500 point spread. But you also have these other 3 to choose from that are 250 wide each. All right, so you'll still have that big daily, and it looks like they're putting in 3 smaller ones that are 250 each. All right, so a few more options there to be able to have some spreads that will last you longer. All right, and more time to be right, but not always having to use that big daily spread and tie up so much in margin. All right, so gonna have a few more options there for you. So for you spread traders that have been asking for that, there you go. All right, so hopefully these will be in live soon, but you can start playing with them now in demo. All right, so right now, if we wanted to trade a spread, whatever strategy or system we're using, it tells us the market's going up, market's going down, we get an entry indication. We want to trade a spread. Well, we've got some options right now. We've got some options that open at 6 p.m. and expire at 11 p.m. And again, we can close out of those spreads early if we wanted to, but these spreads here will go to 11 p.m. These spreads right here go from 6 p.m. to 8 p.m. Then at 8 o'clock here in a little bit, there'll be a new spread that goes from 8 to 10, and then a new one from 9 to 11, and so on. Or we've got our daily spreads at 3 p.m. So again, I'm going to, for tonight's webinar, assume that everybody understands the basics of a spread, how they work. Now what we want to talk about is just addressing a few issues about making sure to pick the right spread. And some of you might have been on a webinar before like this where I've talked about some of these misconceptions or some of these issues. You know, I've had people say, hey, I love the idea of spreads. They make sense to me. As the market moves tick for tick, my spread moves dollar per tick, like that makes sense. Spreads seem a lot easier than binaries because I'm not worried about being right just by one tick or even one tick. You know, in a binary, you could be wrong by 1/10 of a tick and totally lose on the binary. If you go in and you buy a binary for 70 bucks and the market expires 1/10 of a tick below your strike, then you lose it, right? That was a loser. You could lose all 70 bucks if you didn't close early. Well, on a spread, the market expires a tick below where you thought it would. It's $1, right? Dollar per tick. All right, so a lot of people like how spreads work. They like the idea of spreads. They like the lower risk of a spread and potentially the larger reward. If you get into a spread and the market moves up 100 points or a couple hundred ticks, you could potentially make a lot more on that spread than you could on a binary, right? Because when you buy a binary for 70 bucks, no matter how much the market moves, if you bought the binary for 70 bucks, the most it could ever be worth is 100 bucks, right? So there's give and take to both. But some people have said, man, but I get into these spreads and the market doesn't move a whole lot and I don't make a whole lot. Or hey, I bought a spread and the market went up 30 ticks, but I didn't make 30 bucks. I only made like 15. I don't understand it. This doesn't work. Spreads don't work. Okay. And if you've been on with us before when I've covered some of the stuff, you realize that most of the time it's because you're choosing the wrong spread. Okay. So this is kind of a spreads 101 advanced training, meaning if you understand the basics of how a spread works, you understand that a spread is $1 per tick, okay? But there are some different spreads here. So I want to talk to you a little bit about spread pricing, okay? So try to follow along close here and this will make some sense to you here. So let's see what we've got. Okay, these particular spreads right here on the euro dollar, okay? These spreads have different floor and ceilings, right? This one goes from 1100 to 1350, 975 to 1225, 850 to 1100. So let's just make sure that everybody understands that. I know some of you know this, some of you may not know this. All right, what does that mean? Why are there different spreads? Why are there different floor and ceilings? Well, there's different spreads and different floor and ceilings to help give you options. What is your strategy? What is your system? Are you looking for a larger move, smaller move, quicker moves, faster moves? Where do you want to get in? Are you going long or short? It gives you some different options. All right, but the number one question with these spreads is, okay, well, who determines these numbers? If I want to learn how to trade spreads, if I want to be able to know at 8 o'clock when these new spreads open up, where are these floor and ceilings going to be? How does this work? Okay, well, let's make it real simple. These spreads right here that opened up at 6 p.m. that go till they expire at 8 p.m. Well, at 6 p.m., when these spreads became available live, why were these particular floor and ceilings placed here? And I've asked this question before. Who can tell me? Without looking at a chart, without pulling up a euro-dollar chart and going back to 6 p.m. to see approximately where the euro-dollar was priced, where was the euro-dollar market at 6 p.m. without looking at a chart? Just by looking at this screen, who can tell me where the euro-dollar was? Yep, you got it. Okay. All right, the euro-dollar was at approximately 1.1100 at 6 p.m. How do I know that? Well, because that's how Nadex determines what the spreads are going to be. Basically, right at 6 p.m., I think they do it 2 minutes before, so like 5:58 basically. Wherever the market is at that time, that's what they're going to round it to an even number, and that is where the spreads are going to be determined. How does that work? Well, let's look here. Let's start at the bottom. because we've got a bottom spread, a middle spread, and a top spread. We know that these spreads from 6 to 8 p.m., these are 100-point spreads. So let's take a look here. Notice that this number right here, 1.1100, is the same number as this up here, isn't it? So what does this mean? This bottom spread, okay, this spread here, the top of the spread, or what we call the ceiling of the spread, is at 1.1100. And the spread goes down 100 points to 1.1000, right? So the market was at 1.1100 at 6 o'clock. So they're going to make a spread where 1.1100 is the top of a spread going down 100 points. Then they're going to make another spread where 1.1100 is the bottom of the spread, the floor, and it goes up 100 points to a ceiling of 1.1200. Does that make sense? So that's how I know, looking real quick at this, that that's where the market was, because that's what determines, this 1.1100 is what determines the ceiling of this spread and the floor of this spread. Okay, well then we got this spread in the middle that goes from 1050 to 1150. It's also a 100-point spread. Well, where is 1100 at in this number here? Right in the middle. So that means this middle spread goes down 50 and goes up 50, making another 100-point spread. So that's how there's 3 different spreads. That's why there's 3 different spreads, and that's how they come up with it. Okay? So let's look at an example here. Let's just imagine that it was 6 p.m. and the market was at 1.1100. Well, if we thought that the euro dollar was going to go down, all right, and we wanted to go short, if we sold this spread and we sold it right about 1.1100 for the market to go down, what could we potentially make on that spread? If it went all the way down 100 pips, it'd be $100, right? Would we have a lot of risk in that trade? Because remember, if we sold it saying it's going down, but instead the market went up, we don't lose any money above 1.1100, do we? Right, exactly, Mark. So it's very low risk. So you understand why they would make that spread right there at that top of that hour, to where you have a spread that if you went short, you could go short right at the top of the spread, so you don't have a lot of risk, right? Make sense? Okay. What if it's 6 o'clock and the market's right at 1100 and we want to go long, saying the market's going up? Well, this spread right here has a floor of 1100 and it can go up 100 pips. So if we bought into this spread because we thought the market's going to go up, but the market went against us, went down, we don't have a lot of risk there, do we? Right? Because we're buying right at the floor. Does that make sense? All right, why those 2 spreads are there, very low risk. Then we also have our spread that's right in the middle here. Okay, so we know that every hour on the top of the hour, whatever the market's at right then, okay, then that's where the new spreads are going to be. But then we also have other spreads that are still open, that have had time to move. So like these, for example, that are 6 to 8 p.m., look where the market is now. It's at 1103. So that hadn't moved a whole lot. It's still really close here, right? But that's why there's different spreads. And you'll have at times, okay, I can get into one of these 3 spreads, or I can get into this spread that goes to 11 p.m., or I can get into this spread that goes all the way till 3 p.m. tomorrow. Okay? The ones at 6 p.m. to 11 p.m. were determined the same exact way. See? They have the same floor and same ceiling. They go longer and they're wider, but they're still determined the same way. So we've got options here. All right? So let's talk about the first thing we want to look at. What are we trading? What is our strategy? What is our system? Are we a longer term trader? Are we a shorter term trader? Meaning, if my strategy or system is using, 1 hour bars or daily kind of bars, I'm looking at longer term kind of bigger trends, right? I'm not necessarily looking at, okay, what is the market doing within the next 30 minutes? Where's the market going in the next 60 minutes? I'm not just looking at that next hour or two. I'm looking at a longer term trend because my strategy or system is plotting on hourly bars. Does that make sense? If I'm using an hourly bar kind of chart, I'm looking at a longer term trend. So if I'm looking at a longer term trend, right now it's 7:30 Eastern time. If I'm looking at a longer term trend and my longer term trend says the market's going up or market's going down, and I'm looking at these spreads, is the 6 to 8 p.m. what I'm looking for with only 30 more minutes to go? No, right? I mean, that's kind of elementary. Everybody gets that, right? So I'm not going to really be wanting to look at these spreads. Now I've got 6 p.m. to 11 p.m. Now, 11 p.m., that's still another 3.5 hours out. So that may not be bad, right? I mean, that gives me 3.5 hours to be right. It gives me 3.5 hours for the market to go in the direction that I'm thinking it will go. Okay, and maybe whatever my strategy or system is, it normally goes that direction in that amount of time. That might be enough time for me. Okay, but it might not. I may say, well, I don't want to be in this trade until 3 p.m. tomorrow, but I'd like to give it, 6 or 7 or 8 hours to go in my direction. I don't want something that's going to expire at 11 p.m. Well, then you could choose to go with one of the dailies or the daily. Okay, doesn't mean just because it expires at 3 p.m. doesn't mean you have to stay in it till 3 p.m. You can get out of it early. Okay, once you have met your profit goals, or you think the market's turning around, or whatever that may be. Okay, so you could give yourself a little more time to be right, and go with one of the dailies. Okay, so that's the first thing to keep in mind, is what type of strategy or system you're using. Now, if you're using a shorter term, okay, so that's one of the first things I've seen happen. People say, oh, I've tried these spreads, it didn't really work for me. Well, yeah, but when you're using hourly bars and you get a spread that only lasts another hour, you're not giving the market time to do what you want it to do. You know what I mean? So you got to make sure you're choosing the right time frame, first of all. Now, if you're using 1-minute bars or 5-minute bars, or maybe you're using tick-based bars, where your strategy or system is not necessarily a longer term, multi-hour into the next day type of system, you're more of a scalper, or you're more of a short-term trend. You want to know, where is the market going right now? Where's the market going in the next, hour or two, or 30 minutes even, whatever it may be, okay? Then you might be interested in one of these shorter term spreads. Okay, and again, keep in mind it's 7:30 right now. At 8 o'clock, there's going to be a new 8 to 10 that shows up. Okay, so first of all, are you using longer term or using shorter term? Okay, so keep that in mind as well. Now, one of the things that we want to talk about here, let's go back to these right here. This is the key. This is the biggest misconception, confusion, issue, complaint, misunderstanding that everybody has with spreads. You understand what I just mentioned here a few minutes ago, that if it was 6 o'clock, these spreads opened up, and the market was at 1100, and you wanted to go long, you wanted to buy. Well, if you get into this one that has a floor of 1100, then you've got a very low risk, right? Because the market can go against you and you don't have a whole lot to risk there, okay? But you'll normally, let's actually look at these here. These will give us a better example. But when you do get those low risk spreads, okay, you're going to normally have a little bit of premium built into them, Okay. What does premium mean? What does that mean? Well, hear me out here. Where is the Nadex indicative right now? Where is the market at on the euro dollar? It's at 11.02. All right, or right now 11.03. Okay. We see these spreads that have different floors and ceilings. This is what I can buy a spread for. This is what I can sell a spread for. Right? Well, let's look at these differences here. I can buy this one for 10.97. Can buy this one for 11.06, or I can buy this one for 11.12. Whoa, wait a minute. What is that all about? Okay, well, right now the market's at what? 11.03. So if I wanted to buy, and I wanted to buy with some low risk, I'd be wanting to find something that has a floor close to where I'm buying at, right? So I'd probably want to, so if I wanted the real low risk, I could look at this one right here, because it's from 1100 to 1350. Let's look at that on a chart. Euro dollar chart, 1100, right, to 13. Yeah, I got to go way out here, right? So 1100 to 1350. Let me just put something on here real quick, and I want to draw this out for you to help it make sense, because this is where people get confused. All right, so 1100 up to 1350. That's our spread, right? That's where the spread is. Let's kind of put it like this real quick for a minute. So we can see this. Okay, so this spread has a bottom or a floor of 1100, which we have right here, and it goes up to 1350, which is right here. And the market is very close to the floor, right? So if we think the market's going to go up, if we choose this particular spread, it's going to be a pretty low risk spread, right? Because if the market goes down and we're wrong, we can only lose money to where? 1100, right? Because that's the bottom. So that's a very low risk spread, okay? But in return for that low risk, we're going to have a little bit of what's called premium built in, okay? What does that mean? Well, where's the market at right now? The indicative is at 1102. But where can I buy it? What's it priced at? Where do I buy it? At 1111. Does that make sense? I buy it at 1111. So what does that mean? That means if I buy into this spread right now, I would buy it at 1111. Whoop. That's not what I wanted to do. I wanted this right here. I'd buy it at 1111. Okay. So let's bring this back in. All right. Does that make sense? Because that's where that spread is priced at, 1111. Okay. And I know a lot of you have done this. Hey, I want to trade a spread. I like this spread thing. I've got my strategy or system. Market's going up. My indicators say go up. So let me look here, all these different spreads. Okay, I want to choose this spread. And if I say I'm going to buy this spread, ooh, look, my risk is only 11 bucks. And I could profit potentially 239 bucks. Okay, so I only got $11 risk on this spread. All right, cool. What about this middle one? If I go in and I want to buy it, Oh, I risk $131. Okay, no, I don't want to do that. Let's go back in and just get that one. I like that. I only risk 11 bucks. How many of you have done that? Without even looking at where's the indicative at compared to where's the actual price at. You didn't even really calculate that at all. All you did was click this one to say, okay, what's my risk? Ooh, 11, cool. What's my risk on this one? All you did was look at risk and reward. Show of hands, don't be embarrassed. And you're like, ooh, 131? No, forget it. I'll go back to this one. And that's all you looked at was the amount that it showed as risk. All you looked at was the amount that it said you had to put up in margin. And you felt a lot better about putting up $11 as opposed to 131. You've all done that, right? Okay. I did too. Hey, I'm not calling anybody out here. We've all done that. Then you bought into that spread. The market moved up 20 ticks. And then you say, these spreads don't work. Okay, so the market moved up 20 ticks, and the market went up to 1123, right? So right now, the market's at 1103. You buy into a cheap spread. Market goes up 20 ticks and expires. So in your head, you're thinking, well, a spread works $1 a tick. And it was at 1103 when I bought in. It expired here at 1123. I should make 20 bucks. How come my balance only went up by like $8? These spreads don't work. I don't get this. Okay, how does a spread work? Yes, it does go, it is $1 a tick. Wherever you buy in at, compared to where it expires or compared to where you get out, is $1 a tick. But where did we buy in at? We bought in where it was priced at 11.11. So what we got was from 11.11 up to 11.23. So we got like 12 ticks or pips. So $12, not $20. Does that make sense right there? Stop me if anybody's confused right now, because this is the key. This is the key that confuses everyone about spreads. Like literally, don't be afraid. Say something to me, stop me now, so I can cover this again, okay? Because this is where people get confused, all right? Yes, it's $1 a tick, but it's not $1 a tick of where is the market now compared to where is it when you get out. It's $1 a tick from where you get in, where you buy in compared to where you get out. Okay? Does that make sense? So, yes, these spreads that are close to the floor or close to the ceiling are very, very low risk. We only had to put up about 11 bucks to get in that trade, right? Wasn't that it? That's all we had to risk was 11 bucks. So we like that, okay? But that low risk spread was also priced at 11.11 and the market's 11.03. That difference is what's called premium, okay? When you're in a low risk spread like that, there's going to be some premium. Now, there's times in spreads where you can pay premium like that or collect premium. We'll talk about that. Okay, but that's called premium. Okay, and what you're almost always going to have is you're going to have more premium on your top and bottom spreads. Okay, meaning this top spread, since it's close to that floor, okay, and this bottom spread, because it's close to the ceiling, are going to have more premium in it, right? Because look, you're at 11.03 compared to what? 1097 or 1102 compared to 111. The middle spread here is closer. There's not as much premium in the middle spread, is there? Right? It's only a few ticks away. Okay, now sometimes you'll go in here to this middle spread and you'll say, ooh, I have to put up 130 bucks on this one. I don't like that. Well, but where is it priced at? It's priced at 1105. So if you got into that spread, you bought into that spread at 1105, you're getting in a lot earlier, aren't you? You're saving yourself some ticks there, right? You're going to start getting the dollar per tick, as it were, ratio a lot earlier. Now, keep in mind, if we buy right here if we bought up here at 1111, down here where the market's 1103, as the market starts to move up tick for tick, I'm not saying you don't make anything until it gets to 111. Your value will go up, but it might only be like, 0.6 or 0.7. Like, it's not going to be $1 a tick. It might be 50 cents a tick or whatever. For it to start equalizing out to $1 a tick to mimic is when they match up and start moving together. So yes, that other spread will require you put up a little more money in margin, but you're buying a lot closer to right where the market is, just a few ticks away. All right, market's 1103, bought in 1105, just a couple of ticks away. But everybody's like, oh, I don't want to put up 130 bucks. Well, again, that's not your realistic planned risk. If you had to put up 130 bucks to get into this spread, that other spread, okay, because that other spread goes like this, right? It straddles that market, right? It's right in the middle. That's why you're having to put up more. So if you got in that other spread here and the market does go up, which spread's going to start making money faster? Well, this spread, right? Because you got into it here, not up here. Yes, you had to put up a little bit more money to get in this spread. You had to put up $130 instead of only 11. But if you're wrong and the market starts coming down and it goes down against you 20 or 25 pips, aren't you going to probably say, okay, I was wrong and get out? Right? So just because you had to put up 130 in margin doesn't mean you're actually risking 130 bucks. If you're wrong and the market goes against you 15, 20, 25, you get out and you lost 15, 20, 25 bucks. Okay? So you got to keep in mind that max risk, that amount you have to put up in margin, is just the amount you have to put up in margin to get in the trade. That's not your true risk. It's not like a binary, all or nothing. It's not like, oh, the market goes against me a little bit and I lose it all. No, if the market goes against you 25 whole pips, you only lose $25. Okay? So very big difference there. All right, so does everybody understand that? Has anybody been guilty of that? Oh, yeah, I wondered why the market went 20 or 30 pips, but I only made 12 bucks. I thought it was supposed to be $1 a pip. It's because of where you buy in. And for some of you that have been around for a while, you understand this, you know how it works. But these webinars we do on Monday night we cycle through some elementary stuff for new people. We cycle through some, more in-depth strategies as well. But this is still the number one point of confusion for people when it comes to spreads. Okay. All right, Halal, does that make sense? Right? And it's just a matter of, that's the problem is you can't, when you're looking at spreads, do not get caught up in that number. The number everybody gets caught up in is that right there, max loss. Oh, I don't like that. Let's just take the cheapie. Sweet, I love it. Okay, but where are you getting in at? You're going to give up ticks. You're going to give up some proximity or premium there, okay, when you take those ones that are closer to floor or ceiling. Now let's take a look at some of these dailies here. Let's see here. Like some of these, and again, your middle spreads, the ones that are right in the middle, are going to always have a much lower premium in them. Sometimes only a tick or two even. Okay? I mean, we can look at even some of these others. Look at like pound yen. Let's look at this daily here. Let's see here. 50, 53, like just a few ticks. See that? Just a few ticks on the bigger dailies. Some of these others that are closer to the floor or ceiling, okay, they're going to be, look, this one is 162.63 and it's at 162.52. It's almost 10 ticks there. All right, so you've got to not just look at what amount you're putting up. You've got to also look at where am I getting in, okay? It's just like with binaries. It's not just about, hey, what's the amount I'm putting up? I can go buy a cheapy $10 binary. But we know that that strike price is way far away, isn't it? Right? Does that make sense? Okay. So that's the number one thing you want to be careful for there. Now, I'm not telling you not to do it. Okay. What I'm telling you is to be aware of it. Because let's look at something here. Let's say, let me clear some of this off here. Okay. We're going to remove all these. So let's say that we had a spread that was from here to here. Okay. And the market right now is at 1101, and we could buy into it up here at 1112. Okay. So the market's got to move up a little bit before it hits where we bought in and we really start dollar for dollar, right? That makes sense? Hello, that's what premium is right there. The market's at 1101, but this particular spread is priced at 1112. So that difference right there is what's called premium. You're paying a little premium, okay? It's like insurance. You're basically paying an insurance premium. You're going to pay a little bit for it. You're going to pay a little bit for this low risk spread, okay? It's almost like insurance premium, all right? You're going to pay a little bit of extra room there to have the protection of this close floor in case the market goes against you. That's the easiest way to explain what is premium, just like an insurance premium. I may never use that insurance premium. You know, I may never ever have a claim, and I might, you know, every month I got to write that check. It's like, I hate paying this premium because I never have to use it. But I'm sure glad it's there when I need it. Okay, that's the best way to explain premium easily is, hey, in exchange for this low risk, I'm going to get in here. Okay, so I'm not going to necessarily, let's see here. Hello says, so close to the market price, the premium is high. No, the closer the spread is to the floor or the ceiling, the premium is going to be higher because it's that floor or ceiling that gives you the low risk protection. Does that make sense? The middle spread, okay, the middle spread, meaning where the market's, okay, let me give you another example here. Look at this spread right here, 1100 down to 1000. Okay, well, that would be a spread we might want to look at for selling, right? Because where is that one at? Because we have this top spread that's right here at the market going up. Then we have that other spread that has a ceiling, a top right here also at 1100 going down 100 pips, right? Remember? See that? So we've got this spread here that is a bottom of 1100 right here going up to 1200. So it's going up. So if we want to buy, say the market's going long, that would be a very low risk spread for us because the market is very close to the floor, right? And we can't lose below the floor. So it's low risk. Well, what if the market's right here and we think the market's going to go down and we want to sell? Well, that's this spread right here is this one. It has a top of 1100, a ceiling of 1100, going down 100 pips. So if I want to sell, this is going to be a very low risk sell for me, right? Because if I sell, say the market's going down, but instead it goes up, I can only lose to that ceiling, right? So that's a very low risk for me. But where can I sell it at? 1095, right? So if I want to sell it, I can sell it right here at 1095. But the market's right here. I can sell it here. So that difference there is what's called premium. It's a little extra premium I'm going to have to pay for having that protection. Okay, but where is the middle one priced at? I've got this middle spread here, okay, that goes from 1050 to 1150. That spread basically straddles these two spreads, right? It's like this. So I've got to put up a little more to get into this spread, right? Because it's not real close to a floor or real close to a ceiling. But it's priced at 1104. So it's priced real close right here. So it's priced a lot closer. So I'm always going to have lower premium on the middle spreads. The middle spreads are going to have more room to a floor or ceiling, so I've got to put up a little more to get into them. Does that make sense to everybody? So your higher premium is not going to be when you're closest to the market. It's going to be when you have a spread that's really close to a floor or ceiling. Okay? So let's say we wanted to buy this spread and we could get into it at 1104. So what amount of money am I going to have to put up to get into that spread? This one here. So I've got to put up 54 bucks on this particular one, right? Okay. As opposed to this one, I only have to put up 5 bucks. So that's why I like this spread, because I'm only having to put up like 5 bucks. But as the market comes up, this spread's going to start making money a lot faster. Does that make sense? Because I bought in closer. So it's going to give me dollar per tick kind of moves a lot faster. Okay? So now I'm not saying to never do these spreads. I'm just saying they're going to be lower risk, but they're not going to start giving you dollar for dollar until you get further up here. But now, let me ask you this. If I just thought my strategy or system, whatever, market's making a move and I'm only expecting the market to move maybe 15, 20, 30 ticks. Well, I'm going to probably want to get on a smaller move like that. I'm going to want to get in as close to where the market is right now, right? To get the most out of that 20, 30 tick move, correct? Does that make sense to everybody? I mean, if I only think the market's going to, if the market's at 1101 right now, and I have to buy in at 1112, well, that's 11 ticks, 11 pips. If I'm only expecting a 20 or 25 pip move, I want to get into this one, right? I want to get in as close to the market as possible to take advantage of as much of that 20 or 25 pip move as possible, right? But if I'm expecting a big move in the market, I'm expecting the market to move quite a bit, or there's some kind of news coming out, well, then I might be okay with getting something that's a little further out, right? Because I'm expecting a big move anyway. And I'm expecting it to blow through that. So I'm okay with giving up a little bit of that premium. But also remember, over here I had to put up how much? Like $11, right? Over here I had to put up 50 something dollars. So that means for the same margin, I can get one of these or get 5 of these, right? So that means if the market's going to make a big move, well, after it gets to right here, each one of my spreads are going $1 a pip, right? Except this one's going $5 a pip. And I've got the same amount of money tied up into both spreads after that point. Does that make sense? Gary, you ask, a middle spread that drops to the lowest spread range will earn what amount? I'm not sure what your question is there. It all depends on what spread it is. I mean, if you have a 100-point spread and you get in at 50, then you have a potential to make 50, or the most can go down against you is 50. Okay, if the spread is 100 pips, say, I mean, this isn't drawn to scale, but if it's 100 pips, I mean, okay, take a look here. This spread is what? Oh, these spreads are about to expire. All right, let's give it 2 minutes and the new spreads will come up and I'll show you an example. Okay. On mid spreads or high margin, do you usually go for one? Eric says on these middle spreads, do you usually go for a 1-to-1 profit target, especially if you have to walk away or not watch for a little bit? The strategies or system that I use, Eric, are not necessarily just a 1-to-1 type of ratio. You know, I normally enter when my indicators tell me to enter, and then I have stops of when I am going to get out. Like, for example, let me pull up a chart here. Or I was looking at, what was it, pound yen earlier. All right, here's one of my charts. For example, here's on the pound yen, right? Here's one of our systems that we use. It's called the iZone Sharpshooter system, okay? And so if I'm trading this system here, what I'm looking for example, like this is one of my entries, right? The market comes up to one of these zones. I've got indicators telling me an entry valid here. So I'm going to enter here at, what's the price over there? Like 163.44. And I'm going to follow it down until it tells me to get out, which is right here when the market goes past these little predictors, okay? Or like here, I got another entry telling the market's going up, it can all the way up, and I take my profit until it comes back down there. It's not just a 1-to-1, you know, with my systems or strategies that I use, I follow it. I have specific entries that I take, like this one right here. I've gotten in right here at 163.10. I'm following this market all the way down until it comes back up 3 ticks above these predictors, and I got out at 162.84. Okay, so, you know, making 20, 30 bucks there, 20, 30 bucks there, you know, on each one of these spreads. I mean, so, but yeah, if I had to walk away, you know, yeah, I'd want to close it out, you know. Walter, yes, exactly. Yeah, to each their own. I mean, yeah, if you had to walk away, absolutely. Okay. No, Roger, but you can get some information about that in the kind of flow there. If you're on the Apex website, you're under education here, how to trade them, different ways to trade them, and then try out those charts. It's all right there for you. Okay. Yeah, me personally, when I'm trading spreads, I normally will trade the closest one to the market. Not the closest one to floor ceiling, but closest one to the market. Let's go ahead and refresh here. We just hit 8 o'clock, so we should have some new spreads. Boom, there they are, 8 to 10. See that? Okay, so real quick to answer Gary, I think it was Gary's question. Okay, Gary, right here. So we're in the middle spread. This spread is what? This spread goes from 1050 to 1150. It's a 100-point spread, 100 pip spread. All right. So if I buy the spread, I'm saying that I think the market's going up. So 1050 to 1150. All right, let me just draw this out, and then we're going to wrap things up here, and I'm going to give you a few bits of info where we can get some more info to you here. Drawing tools, remove it. Okay. So 1050 to 1150. Let's squeeze this chart down so we can get there. Okay. So that spread, 1150 is the top, 1050 is the bottom, right? So that is this spread. Does that make sense to everyone? The bottom's 1050 right here. Top is 1150 right here. Okay. I think the market's going up. So I want to buy. So I say I want to buy this spread. I want to buy one of them. Well, my max loss is $53. Well, why is it $53? Well, because I can buy in at 1103. What is 1103 down to? If I buy at 1103, what's the most I can lose? The market comes down, boom. I can't lose any more past 1050, can I? No. So 1050 up to 1103, where I can buy it at is what? $53 max risk. Okay. So I'm buying here at 1103 and the market goes up and it goes all the way up to here, I can't make any more past there either, can I? So the max I can make is 47, meaning up to the top. Okay. So that's how that works. Okay. Because you asked earlier, if a middle spread goes all the way down, what can you make? Well, it depends on what middle spread you're doing. Are you doing a 100-point middle spread or 250? But it's wherever you buy in down to the bottom is the most you can lose. Wherever you buy in up to the top is the most you can make. Okay? Does that make sense? So guys, once again, 8 o'clock just rolled around and some new spreads opened up. And what do we have? Well, let's say that I want to buy the spread, or let's say I want to sell the spread. Well, there's a spread from 1100 down to 1000. Where's the market at? 1098. The market's only 2 ticks from the top of the spread. So that's very low risk spread, right? And if I want to sell it, I only got to put up, or I'm sorry, if I want to sell it, I only got to put up $9, right? But the market's at 81, I can sell it for 91. So there's 10 ticks of premium built in there. Everybody see that? So where's the market at? 98. Look here. 96, or I'm sorry, 91 to sell that one. Okay. Right here at 98, I can sell it for 96, only 2 ticks. Right here it's at 98, I can sell it at 1102. There's a lot. See, the middle spread's always going to be the closest one. Yes, the middle spread brings you well, it's not accurate to say the middle spread will bring you the most profit. The middle spread will get you closer to mirroring the market tick for tick quicker. Okay. It's not necessarily saying the middle spread will give you the most profit, because one of these other spreads has a higher floor, right? See, the middle spread only goes to 1150. This one goes up to 1200. So if the market really moved a lot, you actually have more room to make money in this spread. But if the market only moves a little bit, the middle spread is going to get you quicker to tick for tick. It's very simple. I'm showing a bunch of different examples, but it's just as simple as, hey, where's the market at compared to where am I buying or selling? And the closer I buy or sell to the market, the quicker I'm going to start mirroring the market, tick for tick, dollar per tick. Okay. Let's see here. Yeah, Mark, you could say that. Yep, that the middle spreads get you in the money, or more like at the money quicker, so you start making dollar for dollar. Yeah, it's like at the money. So yep, you're going to be in the money quicker. Okay. So does that make sense? Does that help a little bit there? I know for some of y'all this is, you've been through this before, but for others it's like, okay, that's what I've been missing. That's why I get into these spreads. The market moves 20 ticks. I wonder why I didn't make 20 bucks. I only made 10 or 12, because it's not about how much the market moves. It's about where you get in compared to where the market moves. Okay. But people really like the whole, oh, I only want to put up $11 instead of putting up 50 or 80 or 100. Okay. But you got to remember that that amount you got to put in, okay, is not a all or nothing scenario like a binary. Okay. Yeah, Chris, absolutely. That's the best way to look at it. The middle spread is like your at the money spread, like the closest as possible. And normally your closest to the at the money spread is going to be the dailies. Now, do you see here how we've been going back and forth? Like, okay, I've got these spreads that are 6 to 11, and they're 250 points wide. Here's the different prices. Okay, this one's close, and that one's a few. Okay. Now, what's the 7 to 9? Okay, well, those, all right. Got 3 different spreads there and different prices. And then I've got 8 to 10. Okay, and I've got different ones here and different prices. And then what do I have on daily? Got all these different ones, well, man, I forgot. What were the 7 to 9? And you're going all over the place, right? Back and forth all over. And then you forgot which was what. And then by the time you've gone all over the place, the trade's over. You know what I mean? So let me show you something here. I'm going to wrap up with this. This is a free tool that you can use. If you're on the Apex website, go right here to Access Free Tools. Go to Scanners, and then right here, Access the Scanners. And right here, Access the Scanners. There's a step-by-step training course there for you. No, Ahmed, there's all kind of different spreads. I'll show you where you can get that information here. All right, you just sign in again. This will be, we have a Nadex binary and spread scanner. So right here, I'm going to show you spreads. Nelson, are you in live or demo? Because they're only in demo right now. They're not in live. Okay. Yeah, they're not in live. That's what I was saying up front. They're just testing them in demo right now. Okay, so this is the spread scanner. Okay, you're probably like, wait, what is all this stuff? Well, let me show you. And there's a step-by-step course. You can learn how to use it, but this is a free tool you can use as a free member of Apex. Doesn't cost you a dime. All right, if I select euro dollar, okay, what does it do? Boom. What is all this right here? Well, let's take a look. Remember over here on Nadex, what we were looking at. Okay, I got to find these 6 to 11s and all their different floor and ceilings and all their different prices. Okay, and let me go to 7 to 9, and what are all those prices? Let me go 8 to 10, and what are all the, now let me go back to 6 to 11 because I forgot. And wait, I'm all over the place. Look, spread scanner, boom, select euro dollar, everything's on one page. See right here? The ones that close at 9 p.m., the ones that expire at 10 p.m., the ones that expire at 11, the ones that expire tomorrow are all right in front of you. Floor, ceiling, floor, ceiling, floor, ceiling. Just like you see on Nadex. Offer and bid. Here's the price you can buy it for. It's the price you can sell it for. Just like you see on Nadex, but you don't have to go back and forth. Also, what is the other thing you had to do here? Okay, well, I think I like these, and that one's priced pretty good, but so let me click this, open a ticket. Let me say I want to buy it, size. Okay, so that I got to put up $8 max loss, max profit. Okay, that's all right. What is this one? What is the max? So you have to open a ticket in Nadex and fill it out to look at all this max loss and reward, and you don't remember what's going on. So right here, you've got all your contracts. You show the spread floor and ceilings, the expiration time, what you can buy for, what you can sell for. What do you think these red and green numbers are? $53 risk, tells you right there. 46 reward. $8 risk, 92 reward. Everything's right here on one page. Okay, you don't have to go back and forth. You can see everything you need to know right there. What are the different floor and ceilings? What are the expirations? What are the prices? And you can see exactly how much you got to put up. What is your risk and reward? This one here, I got to put up $5. This one, $97. This one, $52. This one, $7. Everything's all on one page here for you. Okay, and yes, we have an integration there where you can place the order directly on the page. Okay, see right here, it's tied into my demo account. I can just click and place an order right here. And this is free for you to use, by the way. Anyone on here can use this. All you got to do is go to apexinvesting.com, and right here on your home page. So let's wrap up here. Again, go to apexinvesting.com. Yep, absolutely, Mark. Yep, live and demo. See, right here, I can come right here and say, okay, I want to buy this spread right here. I'm connected on another browser here to my demo account. And I want to buy this spread right here. Bam, automatically opens up a ticket, and I just place order, and it's done. And I'm in it. Okay, boom, and it popped right up there in my open positions. See that? If I go back over here to my Nadex account, boom, it's there, live or demo. Yes, Mark, yeah, you have to install it in Chrome. So yeah, Chris, it's all tied to live. Yeah, you can do live or demo with the scanner. So check that out. So let's see here. Yeah, Joe, those are great for news trading. Yeah, Eric, that would be great. It doesn't work out that way with some of the premium pricing and so on. So okay, so I hope that helps you guys understand the difference of why there's so many different spreads, why the prices are different, and to make sure that you realize what price you're getting in at. Okay, Robert said this has been very helpful. I'm glad. I hope that helps you out a lot, and definitely utilize this tool, guys. Hop on over, let me show you. Hop on over to apexinvesting.com. If you want to trade spreads or binaries, go right here to Elite Education. Let's say spreads. You're on spreads. Like I said, right here, I'll show you how to get started with Nadex, open an account, right here, Spreads 101. Some of you guys were asking, okay, so explain into premium and explain like why I'm having to put up more money and for this spread, and explain proximity. Like, what is proximity? That means the market's here, but I'm buying further away. Elite Education, Nadex Spreads 101. Okay, go to this course, watch every video. Live trades, Spreads 101, risk and reward. What is proximity? Proximity is what we talked about. Where's the market at now compared to where I'm buying in at? What is premium? Gets in depth about premium of, are you paying premium or collecting premium? If you're close to a floor or ceiling, you're going to pay a little more premium. You will totally get it. Okay? And then you just keep going down. All right, some different trading systems, different systems you can trade spreads. You want to try out a few things. Getting started with some free, show you how to get some free charts and data series. And then right here, the Nadex Spread Scanner course. You can go step by step, understanding how to use that free scanner I just showed you there. Okay, where you can go in and just see everything that's out there. Okay, That way you're not having to go back and forth on that Nadex platform. It's all in one place. Okay, so again, tons of free education there for you. Hop on the website there, go through those training courses. It'll answer any questions for you. It'll catch you up on any of the basics you might have missed. Chris, right there. Chris, to answer your question, right there. If you go through that kind of just literally step by step, it'll show you some right there. Okay. So different systems, different step-by-step courses, and then that free scanner, you can check it out. So, all right, guys, if you have any questions at all, feel free to ask us over in the Apex, here on the Apex website. You can go right here to the help desk and submit a order ticket, or you can go in the forum and post something in the forum, or you can hit us up on the online chat here. Anything we can help you with, glad to help, glad to direct you to the proper system, strategy, the proper training course, whatever it may be. But make sure you take advantage of the free options to you. Hop on and get the free demo account with Nadex. Hop on to apexinvesting.com and get a free username and password. Take advantage of all of the free education and the step-by-step training courses. Okay. Let's see here. All right, guys, I think I got most of the questions answered there for you. Some of those others and some of the basics, again, can be answered here on these step-by-step courses. Eric, where's best to live chat up? Yeah. I mean, if it's something about a strategy or system, Eric, yes. If it's